Hello everyone, welcome back to my channel. So this video marks the end of the week number 66 in this road to 100k realized return challenge. And this week, as we predicted at the beginning, it was a very volatile week. There were many key developments that happened over the course of the past coming days between earnings of very important companies, the Fed's decision, and the meeting between US President Trump and the Chinese President Xi Jinping. There is a lot to unpack here. And so we might as well start by the company earnings. Apparently, and so far, this has been a tendency. So far, the companies that have been reporting earnings have been, for the most part, exceeding analyst expectations. And so far, this has been pretty much across the board in all sectors. Now, in terms of the five big companies, five of the magnificent seven companies that were reporting this week, Google, or should I say Alphabet, Apple, and also Amazon, they beat their earnings expectations by analysts, and so their stock rose. However, with Meta and with Microsoft, that was not the case. Both stocks came down, especially because of, in case of Meta, because they announced they were going to invest more money in AI, and in case of Microsoft, apparently their net income took a bit of a hit of around 3.7 billion because of losses related to their investment in OpenAI, the owner of ChatGPT. And yeah, that's were contrasting differences in terms of their earnings. But I think the biggest highlight was the fact that the Fed lowered their interest rates in 25 basis points. However, Fed Chairman Jerome Powell mentioned that it's not a done deal that they will lower interest rates again in December in the next meeting, and so this was a bit of a cold surprise for investors, and so that explains this dip here that took place on Wednesday. And even though, of course, the market was flying high and reaching all-time highs earlier in the week, and also the meeting between the U.S. and Chinese presidents went well. There were progresses in the tariffs and in the concerted effort to minimize the damage to both economies. So, and apparently another meeting may probably be in the books, maybe in the works for next April, but this is not yet confirmed. However, what does this mean to our portfolio is the fact that we managed to collect something along the lines of, let's see, so by the way, we were assigned triple Q shares at the end of the week. The week went very well, but basically the market went went our way for most of the week, except last Friday night, in which we were assigned shares of the Qs, but we'll get to that in a moment when I'll explain what happened. But basically, this position here, this call on the XLF, was closed this week. So counting towards the earnings, we'll see that we managed to profit. A little bit more than $3,347, which is a very good amount. It could have been a bit higher if along the way we were assigned shares, but because usually the premiums on the calls are a bit higher, but because we were never assigned, um, yeah, this was the best that we could do. Now, on Monday, this basically what happened was that yeah, we managed to still continue to sell puts on IWM, and despite not being assigned, which is what we were basically expecting, you can see here that on Monday we sold 12 puts at 250, then 248, then 246, then 244, and we never were assigned. And this is basically the best thing that it could possibly happen to us, because one of the disadvantages of selling zero DT options is that because the time to maturity is so short, you are forced to sell puts very close to the strike, and if the stock rises, you are committing more and more and more money to as collateral to the puts. But because the stock were falling, the stock was falling throughout the week, but was never by enough for us to being assigned. This was a very good outcome, especially because even though we were never assigned, in some occasions, for example here and also here on Thursday, we were still in a position, because of the high volatility, we still managed to close out the positions despite the stock falling, and still finish the day by selling some puts on the triple Qs. And this was the ideal scenario for us, because it lowered the collateral that we have to put the next day for the IWM shares, and still we managed to collect additional premium on the puts that we sold on the Qs to finish the day. Now, and keep in mind that we were not that much conservative. We sold puts with a probability of profit of around 80-85%. So these were delta 20, delta 19, delta 23 puts, delta 20 again. So this was a pretty good development for us. And so that is why, basically the week went very well for us. Now, keeping in mind that what happened here, and yeah, you can see all the trades in here. These were, of course, for trades that went very well, especially closer to the day in which the Fed basically disclosed his decision on the interest rate. So 720 here, then on the next day also as well, 858. And so it's important also to mention that at some point we already had enough buying power to start to sell 13 shares or 13 contracts on the IWM, which is also another development which is good, because it allows us to collect more premium. But then on Friday we did our usual thing. We also sold 13 puts on IWM with a smaller strike price. We collected, I would say, a very good premium here. Still, even 46 cents is good, despite given the fact that most of the volatility events have already occurred. And at 8:41 here in local time, Central Europe, we still managed to sell, or rather buy back at 8:05 the puts, and still collect more premium by selling puts at 8:41 for 5 puts at 630 strike price on the Qs. Keep in mind that this was a 84, or rather 16 delta puts, so 84% chance that they would expire worthless, so the strike would not be achieved, would not be reached. However, and this let's just change here the time. So here, for example, and as you can see here at 8:41, so we were around here, and the stock here was around 631 and a half, and we sold with a dollar and half down, so 630. But at around this time, shortly after, the stock began to plunge very quickly, and that's the reason why we were basically assigned. And this is not optimal. I would rather keep the money and not being forced to buy the shares. We don't know what's going to happen the next week on Monday. We have this negative cash balance in US dollars. Most of these euros would have to be converted in dollars to offset this cash balance, but that's not a problem. And next week we will have to sell calls on the Qs. The strike price has to be at least 630. It could be higher, but that will depend on what happens pre-market, and that will be the decisive factor whether we would sell calls at the higher strike price. Then our cost base is at 630. XLF, it was an interesting case because we managed to buy back the call that we had coming from the previous week. We sold we bought back the call, and it is right here. However, we tried to sell another call, but for some reason the premiums were too low, and basically I did not want to commit the shares as collateral for a call which was giving us just 10 cents, 9 cents a piece as premium for a share that for a call that would last the entirety of the next week. And so I decided not to sell the call at a lower premium. And so let's see what happens next week. If the price comes back a bit higher, maybe we will be able to sell a call at a higher premium, which is what we want. I think this is all. We should be very close to 2/3 of the way with these earnings, and by 2/3 of the way, we should be reaching about $66,000 in earnings, in realized earnings, and so it should be we should be entering the last third of this journey. Whatever happens next, we'll have to see what happen. We have to wait and see, and hopefully, it will be a little bit faster as we keep getting more premiums and we keep selling more contracts, and the pace of getting to our objective should be little by little increased every bit of a time at a time. And so far this is it. And by the way, one thing, next week probably the week will be less volatile. There are lesser or fewer volatility events. Earnings continue to be released. However, I think now the biggest highlight that will be forthcoming are the Nvidia earnings, because the market will be very much looking forward to that. But as you can see also here, the earnings will come only on November the 19th, so it will be more or less 3 weeks away. And but this will be a very big one. The market will be on pins and needles to see what's going to happen with Nvidia. Usually, it's always like this. Nvidia is usually the last of the Magnificent Seven stocks to release its earnings, and it's usually very late, much later than the other ones. And also, an important factor is that it's going to release the earnings at 10 p.m. here, local time in Europe. So this will be after the stock market is closed, and so the positions or preparation for this will have to be done. Any preparations that we may do for this will have to be done before the market close. And yeah, I think we covered everything. So feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel. Hopefully this different layout will be fixed on at the beginning of next week, because this layout is definitely different. I don't know what's going on. Probably there was some maintenance this today, and so that's why we had to wait until later today to post the video. But yeah, this is beyond our control. And yeah, I'll see you on Monday night or on Tuesday morning to open the week 67 of this challenge. And I'll see you there.